So today's chapter is control accounts. Right. So before we move to the questions, before we move to the control accounts, first we need to understand the ledger, about the ledger. So when it comes to the ledger is the place where we have all the ledger accounts, the T accounts, right? We have all the T accounts. So ledger is divided into two: the personal ledger and the general ledger. In the general ledger, we have the ledger accounts, assets, liabilities, equity, income, expenses. And all the T accounts will be prepared in the general ledger. Right? When the businesses are small, when the businesses are very small scale, right, they will have only the general ledger. But when they expand, when there are thousands of customers and suppliers, to manage the customers and suppliers, businesses will prepare separate ledger accounts. Right? For example, for customers or for the debtors, they will prepare the debtors ledger. For creditors, suppliers, they prepare the creditors ledger. Right? So subsidiary ledgers, we call it sub-ledger or personal ledgers, are maintained in addition to the general ledger if there are many similar transactions in the business. Okay. Now, in the personal ledger, in the sub-ledger, the companies, the businesses maintain the individual accounts. For example, let's say this example. So if you see this, this is the general ledger. General ledger. Right? This is sub-ledger. So in the sub-ledger, if you take debtors ledger, there we have individual accounts. Individual accounts. Right? A, B, C, individual accounts. And there will be a list of data balances. Right? And to show the individual transactions to show debtors related transactions in the general ledger, the businesses will prepare debtors control account. Control account means it is a summary where you have the total values, where we show the total values. And when I do the example, I will show. There was a question. Let me see the question. So if there are only few debtors and creditors, we use general ledger. Yes. So if there is only 2-3 debtors, creditors, businesses, they don't prepare separate ledgers. They will just show that in the general ledger itself. Right? When the businesses are expanded, they will hire a separate person to handle the debtors, customers. Like for example, if you see customer. Now, if you take dialogue company, right? They have a customer base. See the number, 15 million customers. So 15 million, let's assume that they have to maintain ledger accounts for each customer. So 15 million customer accounts they have to maintain. Receivables, right? Customers. So if they record all these 15 million customer accounts in the general ledger, right, the general ledger will become very complicated. If you take supermarkets like Cargill's or Apico or Kale Super, they have thousands of suppliers, right? They don't have credit customers, they don't have much debtors, but they have thousands of suppliers. For suppliers, they have to maintain a separate ledger, because if you take all these customer accounts in the general ledger will become complicated. It's very difficult to maintain. So therefore, in the general ledger, there will be only one account, which is a control account, where you record only the total values. Individual accounts, they maintain for separate individual debtors and creditors. Right? When we do the example, you will understand. So in this chapter, there are three major areas that we need to discuss. Three major areas. Under control accounts, three areas we need to discuss. One is format of control account. We need to learn the control account format for debtors and creditors. Then preparation of subledger and the general ledger accounts. Preparation of general ledger control account, subledger individual accounts for debtors and creditors. Number 3 is reconciliation. Reconciliation. Like debtors and creditors reconciliation, where you compare the general ledger control account with the subledger individual accounts. So 3 parts. So this chapter I will explain under 3 parts: control account, ledger, and reconciliation. So let's start with control account. What is a control account? It is an account in the general ledger in which total of transaction recorded in individual accounts maintained under subledger are recorded. In the subledger, we have individual accounts. So in the general ledger, we have the total. Right? So there are 2 control accounts. One is debtors control account. Other one is creditors control account. Debtors control account and creditors control account. Let me show the format. After that, we'll do a question. Sales ledger means debtors. This is debtors. Debtors control account. Opening balance, similar to a debtors account. Credit sales, sales return, cash received, discount allowed. Right? Once you receive the check, if it is dishonored, it comes to the debit side. Then if there is a delay payment, we can charge, the businesses can charge interest on delayed payment. It's a debit balance. And setting off debtor balance with creditors. Set off debtors against creditors. Right? You have a debtor and creditor, but same person. So we can set off debtor with a creditor. Discount cancelled. And sometimes there can be a credit balance in one of you debtors. There can be a credit balance as well. Right? So opening balance brought forward, credit sales, dishonored check. The credit side, we have sales return, cash received, bills received, discount allowed. So this is a format for a debtors control account or sales ledger control account. And we call this receivable control account. So different names, but the same account. Why is interest on debit side? There is the question. Why interest? This is an interest income. Interest income. Let's say there is a debtor, there is a customer who didn't pay on time. Then we charge interest. Interest income account credit, debtor balance will increase, debtor's account debit. He need to pay more. Let's say he need to pay 100,000. His balance is 100,000. He didn't pay on time. So we charge 10,000 interest from him. Then he need to pay total 110,000. And the 10,000 will be credited to the income statement as interest on late payment. That's why it is debit. Then let's move to creditors control account. Creditors control account. Opening balance is credit side. The opening balance. Credit purchases return, cash payment, discount received. And if the check is returned, dishonored check, penalty charges or delay charges, late payment will be credited. Interledger transfer means the set off debtor against creditor, setting off a debtor against creditor, and sometimes there can be a debit balance as well, like debtors control account. Right. So let's do a question now. Example 1. Take your books. No need to write the question. Prepare the trade receivable control account. Trade receivable control account. Opening balance is given and calculate the debtors collection from debtors. How much is the collection from debtors? You have opening balance and the closing balance. 1st of March, 69,000. 31st March, 98,000. So there are some transactions. Can you all calculate and tell me how much is the collections from debtors? How much is the collections from debtors? Okay, so now you can do this. Debtors control account. Opening balance is 69,000. So once you are done, tell me the answer. What is the cash received from the debtors? Collections from the debtors. How much? How much is collected from debtors? I got one answer. How about others? Cash sales, credit sales, bad debt. Right. Do you take credit sale, cash sales? No, we don't take cash sales because this is debtors control. This is debtors account. For debtors account, we don't take cash sales. But if you have taken the cash sales, that's wrong. So only credit sales will be taken. 868,000. Then we have bad debt, 25,000. Discount allowed. Discount allowed is 15,000. Sales return. Sales return 18,000. Set off with credit. When we set off with creditors, creditor. Setting off debtors with creditors. So we are preparing the debtors control account. set off with creditors. So what is set off with creditors? Let me explain that. A, he is having 100,000 debit balance, and the same person need to pay him 100,000. So 1,000 from him, and settling that, we can set off. So this is the debtors account. Debtors account will be credit, and creditors account will be debit. So we set off. So always set off will be credited to debtors account and debited to creditors account. Debtors account credit, creditors account debit. That's the double entry for set off. Then we also have interest. Interest on repayment is 2,000. And then the closing balance carried down is not forward. That's the closing balance. So difference in this account will be the cash paid, cash received from the debtors. So how much is cash received from the debtors? We take the total debit side, and from that minus 700. So let's see who has given the answer. I got 857, 789. So, see, where did you make the mistake? Set off against creditor means then that again plus another question. We have a debtor. So let's say it's for same person. A is a debtor as well as a creditor. 100,000 debit, 100,000 credit. Settling to him, we can set off, credit the debtors, debit the creditors. So this is what we call set off. Debtor against creditors. So that will be credited to debtors account and debited to creditors account. Okay, so now let's move on to the second example. Now this is the basic format for a debtors account. Answer is 707. Can you all hear me properly? So second example, let's do a creditor's account. Let me check the connection. Oh, yes. Right. So let's do the second example, which is about the creditors control account. Creditors control. Example 2. Now here they don't ask for the cash payment, they ask for the closing balance. Prepare the trade payable control account and ascertain or calculate the trade payable control account balance. Right. So opening balance brought forward is 78,000. Balance brought forward is 78,000. Then cash purchases we don't take. Only credit purchases will be taken. Credit purchases 868,000. 868,000 credit purchases. Amount paid to creditors, that is the cash payment. 545. Receipt 15,000. Purchases return. 18,000. Purchases return will be debit. Set off 6,000. Debited to the creditors control. Late pay. That will increase the credit. So if you get the answer 366, answer. 366,000. So this is the first part in the chapter, preparing debtors and creditors. Debtors and creditors control account. So you need to know the format of debtors and creditors control account. Similar to debtors creditors account. Nothing different. Part in the chapter is debtors and creditors control account. Example 3. In the same question, you have debtors and creditors both. So then you will do this. Example 3. Debtors account. Opening balance 300,000. Opening balance 600. And calculate the closing balances and tell me how much. What is the closing balance? Prepare the debtors control account and creditors control account. Tell me the answer. Right. So can I have the answers? Credit purchases 950,000. Credit sales 890,000. Return outwards. What we purchase is return. Return outwards 12,000. Return inwards. Return from customers. Sales return 16,000. Discount received. Receiving discount from creditors. Discount received is 20,000. Discount allowed is from the debtors 30,000. Cash and check paid to creditors. Cash and back 450,000. Received from debtors. Cash and checks 385,000. 385,000. Set off against creditors with debtors. So debtor will reduce. Set off against creditors 132,000, and that will be debited to creditors account. Set off against debtors 132,000. Set off against creditors and set off against debtors. Check received from debtor return. Now, if the check is returned from the debtors, the debtor balance will increase. Dishonored check. If a check paid to creditor is returned, the creditor balance increase. Dishonored check. $45,000. Bad debt will reduce the debtors. $35,000. Doubtful debt will what happens? Doubtful debt. Will it reduce the debtors? No. Doubtful debt. Double entry is doubtful debt account debit. Provision for doubtful debt. So doubtful debt won't come to the control account. So that's all we have. Set off two entries. Set off double entry is debtors account credit, creditors account debit 132,000. Cash paid to creditors. Cash paid to creditors will be debit. This is cash paid to creditors. Cash account credit, creditors account debit, 450. Cash received is cash account debit, debtors account credit. Okay. Now let's take the balance. Balance carried out. Debtors 967, creditors 1,181,000. $967, and 1,181,000. So now we know the format, the basic format of debtors control account, creditors control account. That's the first part in this chapter. A very simple area. Now we are moving to the second part. Second part is preparation of individual accounts and the control account. Individual accounts, we record individual transactions, and the control account, we record the total amounts. Purchases means total of purchases. Cash payment to creditors means total cash payments. Right, so let's do the fourth question. Question number 4. So this is the question. There is a question, so why doubtful debt didn't come? Doubtful debt will be not deducted from the debtors. Doubtful debt has to be shown separately in the provision for doubtful debt account. Double entry for doubtful debt is expense account debit, the doubtful debt expense account debit, provision for doubtful debt account credit. But bad debt, expense account debit, debtors account credit. So that's the reason we don't take the doubtful debt in the debtors account. Okay, so example 4 is debtors control account and debtors ledger. Right now we have general ledger. This is general ledger. So in the general ledger, you can draw debtors control account. General ledger, you can draw the debtors control account. And separately, you can draw the debtors ledger. What is debtors ledger? There you have individual debtors accounts. Individual accounts. Now here in this question, we have 4 debtors: Nuan, Lakmal, Lalit, Kumara. So for individual transactions, we have to record, we have to show the debtors individual accounts in the debtors ledger. Right. Write the heading general ledger and draw one account for debtors control account. Then write the heading debtors ledger and draw 4 ledger accounts for Nuan, Lakshman, Lalit, and Kumara. So we have transactions, opening balance, credit sales, return inwards, cash receipts, discount due. General ledger, the control account, debtors ledger, individual accounts. We are preparing debtors control account and debtors ledger, individual accounts. Then first, shall we prepare the debtors control account? In control account, we have to get the total. What is the total opening balance? Let me take the balances. Right, so we have 15,000 plus 44,000 plus 4,500, 63,500. Credit sales 53 plus 78 plus 82 plus 45, 258,000. Return inwards 5,000 plus 3,000 plus 4,500, 12,500. Receipts 25,000 plus 66,000 plus 36,000 plus 29,500, 156, 500, 2,000 plus 1,750 plus 500, 4,250. Now take the total balances and prepare the debtors control account. Very simple. Now we know the format. Debtors account format. So put this into the format. Opening balance, debit side, 63,500. Credit sales, debit 258,000. Return inwards, creditor 12,500. Cash 156,500. Discount allowed 4,250. So that's all we have. If you know the format, this is very simple. Then calculate the closing balance. So control account, we will take the total. Now individual account. Individual account is very simple. You take the row one by one. If you take one, opening balance for one is 15,000. Credit sales is 53,000. So individual accounts Return inwards 5,000. Cash 25,000. So you calculate the closing balance. Individual. Can you all do this? Rakmal, control account, you take the total. Individual account, you take the individual balances from the table. It is not hard, it's very simple. Lalit, no opening balance. Then we have credit sales. Return inwards, cash receipts, discounted. Kumara, more balance brought forward, credit sales, no returns, cash, discount, balance right. Rakma 78,000 credit sales, return inwards 3,000, cash 66,000, discount 2,000. Lalit 82,000, 4,500 return, cash 36,000, 1,007. Kumara 4,500, 45,000, $29,500 cash, discount 500. So if you calculate the balance, minus 38,000. Control account balance is 321,500. 148,250. So once you are done with the individual accounts, right, we prepare a debtors list in the debtors ledger. One, Rakmal, Lalit, and Kumara. We take the closing balances of each individual debtor. Kuman is having 38,000, Lakmal 51,000, Lalit 39,750, and Kumara it's 19,500. So the total of debtors list is 148,250. You can see control account total equals to debtors list total. So this is how we prepare the general ledger control account and sub ledger individual accounts. Very simple. Only thing you know is the format. It can be individual account, it can be control account, the format is same. The difference is in individual account, you record the individual transaction values. In the control account, we take the total amount of each prime entry book. Right. So the total amount you can take from the prime entry book, sales day book, purchases day book, cash receipt journal, cash payment journal. There you will have the total amounts. Right. Any doubts up to now? Is it clear? Easy, you can easily get the marks from control account. Right. Now the next question is creditors control account. Same title. Okay. Now this question, creditors control account. The table below gives transaction for G and company for the month of December. We have 4 creditors: Amal, Bimal, Cecil, Diana. Opening balance, purchases, cash paid, discount received, purchase return. Then there is one additional information which says GG and company has not received the amount due from Cecil and company as at 31st December, and it has appeared in the debtors ledger of GG and company with a debit balance of 52,000. Cecil and company has agreed to set off receivable against payable. So Cecil and company 52,000 we have to set off. So only that is the new thing here. You are required to prepare creditors control account and individual creditors ledger accounts of GG and company as at 31st December 2000. Can you all do this? Draw general ledger creditors control account and individual accounts in the creditors ledger. And finally, creditors list. what is the closing balance? If you take the individual accounts, let me do the individual accounts. This is creditors. So opening balance is credit 25,000. Purchases 40,000. Cash paid 38,500. Discount receipt 1,500. Purchases return 2,000. Balance carried down, balance performed. Demand 40,000 opening balance. Purchases 35,000. Cash paid 50,000. Discount received 2,000. Balance. CC opening balance is nil. Sorry, opening balance is 15,000. Purchases 55,000. Purchases return 5,000. And there was a transaction related to CC. What was that transaction? It is set off 52,000. So you have to record the set off balance in Cecil's account. Diana agency opening balance is nil. Purchases 34,000. There's no payment or any other transactions. Individual accounts. Amal 23,000. Bimal is also 23,000. Cecil 13,000. Amal 23. Bimal 23. Cecil 13. And Diana 34. So total individual balance will be 93,000. Now you have to check creditors control account. Total should be 93,000. Opening balance 25, 40 plus 15. 80,000. Purchases 40,000 plus 35, 55, and 34. 164,000. Cash 38,500, 50,000 and 5,000, 93,500. 93,500. Discount 1,500 plus 2,000, 3,500. Return 2,000 plus 5,000, 7,000. Set off is 52,000. Now what is the balance? Cash is 88,500. Right. So 93,000 is the total balance, closing balance, and 93,000 is the control account balance. I'll check the answers. So let's do one more question. Okay. And so I explained, I did two parts. The third part I will explain in the next class because it is reconciliation part, need more time for that, for the explanation. So I will keep that for the next class. Right. So question number 6, 7, 8 and all related to reconciliation, similar to the bank rec. I'll do that in the next class. So now I will do one more question which is related to control account and the individual accounts. Okay, so let's do this question. Debtors control account and debtors ledger. Know the format. Anil, Sunil and Gagul. Anil, Anil, Sunil and Gagul. Okay, so individual accounts and debtors control account. So can you all prepare and tell me how much will be the closing balance? Okay, so let me start. Opening balances given for Anil. Balance brought forward. Debit 10,000. Sunil 15,000. Abdul 17,500. So total balance brought forward is 10 plus 15 plus 17,500, 42,500. Credit sales and return. Sales Anil 40,000. Sunil 30,000. Only Anil and Sunil. So total sales 70,000. There are different methods, different steps or methods you can do. Earlier one, I did individual account first, then the general ledger control accounts. Then I did another method, control account first, then did the individual account. Now this question I am doing parallelly. Okay. Sales return 5,000. $5,000 to Sunil. Sales return 5,000. Money is received during the year, during the month of June 2011 and discount allowed. Anil cash 18,000. Sunil cash 32,000. Cash 18 plus 32 is 50,000. Discount. Discount allowed 2,000 Anil. Sunil 3,000. Total 5,000. Total 5,000. Discount allowed. Then there is one more transaction which is given as additional transaction. Court declared Gagul as bankrupt on 29 June 2011. Thus the amount due from him is to be written off. So the Gagul's balance is a bad debt, 17,000. So we write off Gagul's balance. Bad debt, 17,500. Now let's calculate the closing balance. You can double check the values. Is it correct? 35? 35,000. So debtors list, we have Anil, Sunil, and Kabul. Anil 30,000, Sunil 5,000, Kabul 0, 35,000. So this is 35, and this is also 35. Right. So as I said earlier, this chapter has 3 parts. Part 1 is format of debtors control account and creditors control account. Part 2 is preparing ledgers, general ledger and the sub ledger. Part 3 is reconciliation. Now the next step we are going to do is reconciliation. I will just brief you all today, and in the next class, Thursday, I will explain the full concept of reconciliation. That is very, very important. I think every question in the A-level paper, we get the reconciliation part. So to do the reconciliation, you need to have a full knowledge on preparation of general ledger and the sub ledger. Now you can see always the control account balance should be equal to debtors ledger balance. So we assume that general ledger is prepared by the accountant from us. This is done by someone else. You need to initially make that assumption. Like when we do the bank reconciliation, at the cash book, this is the cash book we did. This is the cash book we did, and this is we assume done by the bank. So likewise, we assume control account is done by us, right? The debtors ledger is done by someone else, another person. Okay, right. Now these totals should be equal. Now, if there is an error, if there is a difference in these two, either the difference can be caused. Difference. If there is a difference, the difference can be caused from the general ledger or control account, or it can be caused from the individual account. If the difference is caused from the control account, we will revise the control account using revised control account. Similar to the bank rec, if there is a difference, if the error is, if the difference is caused from the bank account in the business, we prepare the revised bank account. So likewise, if the difference is caused from the control account, we prepare the revised control account. And if the difference is from the debtors ledger individual accounts, then we can't correct it. We will prepare the reconciliation statement. Reconciliation statement. Difference can be from the control account. Then if we prepare the revised control account, and if it is from the individual account, we prepare the reconciliation statement. Let me explain one example now. Assume that now the sales total is 70,000. But in control account, we are going to make a mistake. We're recording 70,000, The accountant has taken actual amount is 70,000. Error. Let me write the error. Error 1. Total sales 70,000 was taken to control account as 9,000. Right. So here in the sales, I'm going to put 90,000. Now what happens? See, there is a difference. So you can see there is a difference. Control account balance. Now if you make that mistake, control account balance is 55, debtors list balance is 35. Now how are you going to correct it? Where is the error? Error is in the control account. If the error is in the control account, you have to correct it through the control account. How do you correct this? You have to credit the control account sales overcasted 20,000. 70 was recorded as 90. So if you correct it, now the balance will be, now if you calculate the balance, it will be 35,000. Okay, that's how you do the correction from control account. Let's take another example. This is correct. 7. No mistake. 35. I'm going to take another mistake, another error. Now both balances are same. Number 2. Discount allowed 5,000 was omitted from control account. Then what happens? Here, discount allowed omitted. 5,000 omitted means in the control account you will have 5,000. Debtors list you will have 35,000. So where do you adjust this? In the control account, you have to credit discount allowed 5,000. So if you credit 5,000 into the control account, then the control account balance will be 35,000. That's how you correct if there is an error in the control account. Now I'm going to take an error in the debtors ledger. Number 3. Sunil's balance. Credit sales to Anil 40,000 was recorded as 30,000 in Sunil's account. It was correctly recorded in control account. And so control account, it is correct. 35,000 is the balance. But here, sales to Anil. So this is Anil. sales value actual amount is 40,000. But it was recorded as 30,000. If you record 30,000, what happens? See the debtors list balance. It becomes 25,000. Now control account it's 35, debtors list 25. There is a difference. Now this difference, you don't adjust it through the control account because control account is correct. Then what you do is you prepare a reconciliation statement. Reconciliation statement. Starting with balance as per revised control account. And there will be plus and minuses. Answer is balance as per debtors list. So control account balance is 35,000 now. How do you get balance as per debtors list? Balance as per debtors list should be 25,000. So what do you do for this 10,000? Is it plus or minus? To get the answer 25,000, what do you do? If credit sales 40,000 was recorded as 30,000, the debtors list balance is low. If they record 30,000 in the individual account, the debtors list balance will be low. Therefore, it will be deducted. If the debtors list balance is low, this will be deducted. Then your answer will be 25,000. So careful. You have to remember, reconciliation statement means it is not a correction. We are not correcting from the control account balance. We are going to take the debtors list balance. So it's not a correction. It's only comparison. Right? So that's how we make the reconciliation statement. Let me take one more example. Now we'll take it properly, everything. 40,000. 35, 35, now it is correct. Now there is another error. Discount allowed to Anil was omitted from individual account. It was correctly recorded in the control account. Discount allowed omitted. This is correct. 2,000 discount allowed. Discount allowed. $2,000. So if you don't record this, then what happens? If you don't record, see the debtors list balance will be more. More means you have to add 2,000. So why did you add? Why did you add? Because if you don't record the credit entry in the debtors ledger, if you don't record the credit entry, if you don't deduct the debtors ledger, the debtors ledger balance will be more. Therefore, you added. So that's the concept behind this. That's the concept behind this. Let me take another example. This is where you need to understand. This is the most difficult part in this chapter. Okay. The first two parts are very simple, very easy. This is where a lot of students make mistakes and have doubts. Now let's do another question, another example. 5. Sunil's opening balance. No. Credit sales to Sunil 30,000. Recorded as 40,000 in Sunil's account. Is recorded more. 30,000 recorded as 40,000, 10,000 extra. Then what do you do? Plus or minus? Tell me whether it's plus or minus 10,000. If you record 40,000 in Sunil's account, the debtors ledger balance is more. If the debtors ledger balance is more, you will add plus. It's not minus, it's plus. Why it is plus? Because the debtors list balance is more than the control account balance. So 45,000. Because of the error, because of this error, debtors list balance is more than the control account balance. If the debtors list balance is more, this is the note. You can write a note separate. If debtors list balance is more, it will be plus. And if debtors list balance is less, we have to be minus. Let me take another example. Example 6. This was 30,000. So keep as it is. Now there is no errors. Both the balances are 35,000, 35,000. Now I am going to make one mistake. Cash paid to Anil 18,000 was recorded as 20,000 in Anil's account. What do you do? 18,000 was recorded as 20,000. Plus or minus? Plus or minus? What is the answer? So it's a minus 2,000. Then only you get the data list balance as 33,000. So answer should be 33,000. So I'm telling again, I'm repeating again, we are not correcting. We are comparing. We are trying to get the data list balance from the control account balance. If the credit balance is more in the data ledger, if you deduct more in the data ledger, the data ledger balance is less than the control account balance. So you compare less than the control account balance. That's why you deduct. Deduct is 2,000. Okay. So that is how we prepare the reconciliation statement. So next In the next class, I will explain the uh, revised control account and the reconciliation statement. Is it clear? Basic. There is a question. Is there any transaction which affect both? Yes. Now, let's do another example. There are some transactions, there are some errors which affect both. Transaction number, error number 7. Sales to Sunil omitted from all the books, or omitted from control account as well as individual sales to Sunil, how much? 30,000. Right. Then here also sales will be 40,000 because that 30,000 will not be recorded. And this sales 30,000 will not be recorded. So therefore, in the control account balance is 5,000, debtors list balance is also 5,000, but there is an error. How do you correct this? First, the error in the control account, you have to correct it. Omitted sales. That you have to record 30,000. Then the control account balance will be 35. You calculate the control account balance after correction. After the correction, it will be 35,000. Let's go forward 30 after correcting. But the debtors list 5,000. So this is 35. Then we write balance as per not control account, balance as per revised control account. Then what do you do? Because omitted from the individual account means it's minus 30,000. Balance as per debtors list is 5,000. If there is a difference or if there is an error from the control account, you have to correct it. But individual account, it's taken to the reconciliation statement plus minus. Is it clear? Error in both. So this there can be discount allowed omitted from both, right? Sales return, cash related transactions, sales related transactions. Right? So those are the things that you need to know. Right? So don't worry, I will explain this part again. Here I was just giving a brief knowledge on how the revised control account and the reconciliation statement is prepared. Right? So today what I want you all to know is the formatting part, debtors control account, creditors control account, and especially the individual accounts and the control account preparation. Right? So hope it's clear. Is it clear? Can I get a response from everyone? Did you all understand the control accounts part? There's one more question. So if they mention only about the subsidiary ledger, then should we consider that the control account is correct? Yes. If they specially mention individual account is wrong, that means the control account is correct. If they specially say control account has an error, then we assume that individual account is correct. Yeah, that's right. Then I will explain the reconciliation part again. Don't worry. So if there is no doubts, we'll conclude the session today. On the next session, I will explain the third part. Okay. So good night and take care. We'll see you on Thursday with our paper class. So paper class, we will do past paper questions related to whatever the chapters we have completed. Okay. So, good night.